Hello and welcome to an FX Times daily video recap. I'm CMS Forex market analyst Nick Nassad. Today is Friday, December 11, 2009. We begin today's broadcast with a look at US fundamentals as we had retail sales data for the month of November rise 1.3%, a figure that was better than forecast. That followed a 1.1% increase, which was revised downward slightly. If we take a look on the graph on the right, we see that now we have two straight months of relatively strong gains following a weak month in September, which had followed a strong rise in August on the back of the Cash for Clunkers program. So it seems that US consumers are getting off the sidelines and jumping back into the economy and spending again. The gains were rather broad-based, as sales excluding autos gained 1.2%, also much better figure than forecast. If you look at this red line here, this shows the annual pace of sales or sales compared to a year ago, and this month we actually moved above the zero level and into positive territory, and that's the first time we have done so since the middle of 2008. Despite the end of the Cash for Clunkers program, US consumers continue to buy cars as sales of autos and parts rose 1.6%. We had gas station sales rise 6%, which led a good amount of the increase, but even if you take out sales of gasoline and cars from the equation, sales were up 0.6%, as shoppers spent money in health stores, restaurants, on building materials, electronics, and on food and beverages. The only two categories showing a significant decrease were clothing sales and furniture retailers. The positive data helped to boost the greenback, as it's a sign that the US economy is recovering and consumer spending, which makes up about 70% of the economy, is rebounding heading into the holiday shopping season. Along those lines, we saw the UMISH Consumer Sentiment Index, the preliminary version for December, rise more than expected to 73.4, and that's timely as it comes again prior to the holiday shopping season. It's the best reading we've had in 4 months, going back to September of this month. And the gains were led mainly by the current conditions index, though the expectations index rose as well. The current conditions rose to 79.1, which was a big surge from the 68.8 we saw in November, while the expectations index rose about 3 points to 69.7. In a look at the euro-dollar pair, we see that following the retail sales report, we had a sharp slide in favor of the greenback as we moved from around the 1.4775 level, which was today's high, down to 1.4585, a change of about 200 pips. We broke through our support through the rest of the week, here around 1.47, and we have been consolidating the previous 2 sessions, with today the pair breaking out of that consolidation zone. The theme for most of this year has been that positive data from the US or abroad had helped to boost risk appetite, which favored the higher yielders and the euro and not necessarily the dollar. However, the non-farm payroll report that we had last Friday has changed that dynamic, as now improved data from the US labor market and in consumer spending increases the likelihood that the Fed will have to begin tightening its loose monetary policy, which strengthens the greenback. We also had some euro weakness, as traders seem to be fleeing the euro, as today overnight were grumbles about problems with Ukraine and its debt. We already saw jitters in terms of Greece and Spain earlier in the week regarding downgrades of credit ratings and outlooks for growth. So we'll see if that trend continues in the weeks to come. If you look at the pound-dollar pair, we see that we had a similar situation shaping up where we had a consolidation in a sort of symmetrical triangle pattern. But unlike in the euro-dollar pair here, the support for the week held. And so that shows some of the euro weakness we had in the markets today. We did break down below this support trend line and out of this consolidation pattern, but we still remain within the range that we've seen from the middle of this week, with support and resistance here. If we compare the euro and pound against each other, we see that today the pound gained strongly against the euro, dropping to just below the 0.89 level. We've been in a bit of sideways trading for most of this week, but we have been seeing some lower highs in the pair, with support shaping up here at today's low and the low from November 25th. We're going to see if this descending triangle pattern will hold, and if we have perhaps a move back up to resistance, or if we move below this level next week. So these are your important levels to watch. In a look at the dollar-yen pair, the positive consumer spending number today is good news for the U.S. recovery and for economic growth. On the other hand, Japan saw its economic growth for the third quarter revised downward rather sharply, and with the country facing some deflation worries and in need of new stimulus plans, the yen has been pressured in the second half of the week. So we saw the yen gain here on credit concerns, and also to a correction to the rally in the dollar against the yen that we had since November 27th. Now we had this level of resistance here that was broken, and we retested it around 87.50, and we retested it now as support, and we've had a rally now in the last 3 sessions since hitting that low. Now if the Greenback and the Fed shows any signals that it's inclined to raise interest rates, that could favor the greenback in terms of carry trade, and traders may look to the yen as the funding currency for carry trade, as it's been the greenback recently that has been the main funding currency. The dollar-Swiss franc pair, which have been consolidating for the middle of the week following our rather large rise in last Friday's session, and once we hit the 1.03 area, we've been consolidating on Wednesday, Thursday, but today we broke out of this range. Let me put a support level here, and we moved all the way up to 1.0366. So that is a signal of greenback strength against the Swiss franc, and we'll see if we push higher, or if we see a correction to this move above 1.03 and a retest of the 1.03 level early next week. Greenback strength extended to even our commodity currency pairs, which were higher in the middle of this week. Here we're looking at the Australian dollar US dollar pair, and following a retest of our high from yesterday around 1.092, we were unable to move above that level, and we fell in the wake of the retail sales report. So we retraced about 50% of this rally in favor of the Australian dollar from the middle of the week. And if we take a look, we had this resistance trend line shaping up from these 2 highs that held as well here. So we had a horizontal resistance level and a downward sloping trend line. So both those levels held today. So that's it for today's market highlights. Let's take a look at the fundamental releases we can expect next week. In the US, we're going to have producer prices, the Empire Manufacturing Index, and industrial production coming out on Tuesday. Wednesday, we see consumer prices, housing starts, and the FOMC statement, while Thursday, we get the Philly Fed Index and jobless claims. So those sets of data will give us good information on how inflation is holding up, regional manufacturing surveys, a bit of information on the housing market, and of course the FOMC statement. So we'll see what kind of statement the Fed will give following these better labor statistics we saw last Friday and today's retail sales data. From the rest of the world, early next week, Japan posts its Tankan manufacturing survey, an important measure of confidence, quarterly confidence in the economy. Monday, we see the Australian Reserve Bank of Australia post its meeting minutes. Tuesday, the UK posts its consumer prices, Germany posts the ZEW economic sentiment, and Australia releases its third quarter GDP figures. On Wednesday, the UK will post its employment report, the claimant count, and we also get the flash versions of services and manufacturing PMIs from the Eurozone. Thursday, we get UK retail sales, and Friday, we get the German IFO Business Climate Index. And that will wrap up our coverage of the Forex market for this week. For more news, analysis, and videos, please visit our site, fxtimes.com. I want to thank you for watching, and wish you a great weekend.